Cciv is a company that Michael Klein took public through a SPAC, and they own a portion of Lucid Motors. What's Lucid Motors? Maybe the next Porsche of EV? From the get-go, there was a lot of hype in this SPAC.
And there's always a Lucid pop. I find it to be exciting. It's almost prurient, right? I mean, can we really think that it's right up there with trying to figure out?
I mean, just take a look at this chart. Going from $10 all the way to $65. Everyone's thinking, this thing is hitting $100, and once it does, it's going to the moon. Every single news publication was talking about it, hyping it up. Everything was going great. People are making money. There's no stopping us. But all of a sudden, the stock started falling apart.
Tesla competitor Lucid Motors is going public through a SPAC. It's combining with Michael Klein's Churchill Capital. The stock selling off after spiking recently on expectations for a deal.
And then this happened, a complete nightmare. The stock started trading off from $36 all the way down to $18, where we are right now. So, where's this stock going? And how can we use options to profit from it? I'll walk you through the bull case and the bear case. Then, we'll get Felix Fry on to give us his view of the stock and what you can do with options. Stay tuned, you don't want to miss it. So, we have a stock that rallied on merger news with Lucid Motors, making a jump as high as 500% and more, only to trade off to a level of 19 where we are right now. My name is Marco Rajenka, and I'm going to lead you through the bull points and the bear points of Cciv. And then, I'm going to get Felix Fry on to show us his view on the stock, and most importantly, he's going to show us different options plays that you can do whether you're bullish or bearish on the stock. So, let's get started with what the bulls are saying about Cciv and Lucid Motors. Michael Klein and Saudi Investments. Michael Klein is a Wharton graduate who worked at Citigroup from 1985 to 2009, holding many roles including CEO of Global Banking and Vice Chairman of the entire company. He's also a legendary dealmaker who's been involved in the process of several large mergers from public companies. At this point, he executed 7 SPACs, one of which is Cciv merger with Lucid Motors. In the deal, Cciv put down $2.1 billion in cash, and there's also an additional $2.5 billion in a pipe deal. Saudi Arabia Private Investment Fund is also heavily involved in the name with a large percentage ownership. Based on today's price of Cciv at around $18, Lucid Motors is valued at approximately $30 billion. With the backing of a successful businessman and dealmaker, Michael Klein, many investors are and have been showing confidence in Lucid. Adding to that, the fact that Saudi Arabia's investors are big backers of the company, in my opinion, that is a very bullish sign because these guys are aware that EV is the future. And that their oil dependence must decrease, but not only that, they also know that in order to keep their money and influence, they need to jump into the next big thing, which is renewable energy and EVs. Now that I mentioned the Saudis, that leads me to my second bullish point, and that is Lucid is the next Porsche of EV. A couple of years ago, everybody had the same question. Why are EVs so ugly? And until Tesla showed up, that really was the case. But now, as the market is expanding, it's only natural that we get different EVs for different audiences. That's where Lucid and the top 1% meet. Their models range from $70,000 to $160,000, and honestly, the car looks absolutely amazing. When I see Lucid Air's models, I'm instantly thinking Audi A8, BMW 7 Series, Mercedes S-Class, Porsche Panamera. And that's exactly the target audience that Lucid is going after. The rich and wealthy who like to drive high-end, technologically advanced vehicles with one main twist, electric vehicle. Because for the top 1%, it's all about prestige and glamour, and most importantly, the price doesn't play a huge role when it comes to buying a car, because they can easily afford it. And what's the one place where this is really prominent? You guessed it, Saudi Arabia. They are their own perfect customer, and they know exactly what the top 1% are looking for. They're looking for their next daily driver, and that is Lucid Air. This leads me to bull point number 3, and that is a different buying experience and production process. As Lucid follows in Tesla's footsteps to disrupt the car dealership model, that means no dealerships with nightmare price bargaining, fast-talking salespeople, and a ton of paperwork. Tesla and Lucid have done what appears to be the preferred path to a direct sales model. And while this will likely save on overhead, it also accomplishes a more personal and relaxed experience for the modern car buyer, especially a top 1% car buyer. The Lucid experience is similar to Tesla with a luxury twist. These showrooms are meant to act as an initial point of contact and not much more. Locations will offer test drives, but the entire ordering process will be done online. With these smaller locations, vehicle deliveries to customers would be a logistical nightmare, but instead, Lucid will have other locations dedicated to deliveries and services as well. Adding to that pleasant and futuristic experience of buying a car, let's also take a look at the production process and what the CEO says. Lucid is pursuing a slightly different path to market than some of its peers. He wants to be asset heavy, believing controlling manufacturing is critical for success in the auto business. Manufacturing is too critical an activity to entrust with a third party, Lucid CEO Peter Rawlinson told Barron's in a recent interview, pointing out someone has to own the assets that build the car. He believes the owners of the assets have the biggest opportunity for profits. Lucid seems to be taking a very good approach in my opinion, where they are taking full control of their production process, which is going to be very beneficial when it comes to fulfilling their quotas and estimates. And now that we mentioned the estimates, let's actually take a look at the bullish points we've made before we go into the bear arguments. From 2022 to 2026, the company is predicting a jump from $2.2 billion to $22.7 billion in revenue. This is a huge increase over a very short period of time, but with the backing of Michael Klein and the Saudi Arabia Investment Fund, with the company's focus on creating a luxury high-end EV brand targeted at the top 1% of buyers, combined with a futuristic purchasing experience and autonomous production process, Lucid might as well hit those estimates and prove to be a very successful company in the luxury EV space. Or, not everything turns out as expected and perhaps bears turn out to be right. Here's what the bears are saying and have been saying for a while now. Michael Klein's sell-off. We've established that Michael Klein is a great asset to the company, along with the Saudi investors and other names involved. And remember, Michael Klein is first and foremost a great businessman and a great investor. He's sitting on billions of dollars he made in this deal, and he might be tempted to take out some profits when the lockup period is over. He's in it to win it, and winning it means making money. And it might not only be him. I'm sure there's a lot of other insiders that have made some good money so far who might be looking to cash out. They haven't sold anything yet, but as time goes on, that's most likely going to change. So, definitely keep this in mind when looking into Lucid Motors as a potential investment, both long-term and short-term. Now, let me show you the biggest bear flag I see with CCIV, and that is they are trying to do too many things at once. A few minutes ago, we just mentioned how Lucid is the next Porsche of EV, right? Well, how is that ever going to happen if CEO Peter Rawlinson has ambitions to jump into the affordable space with a vision of a $25,000 vehicle? To do this, Lucid is hoping to work with mass market car makers to get its technology into production as soon as possible. Because although there is a need to get millions of $25,000 cars into production fast to save the planet, Lucid's position leaves that goal about 8 to 9 years out, even with the right technological developments. As such, a deal with Honda, Hyundai, or Toyota could allow this vision to surface in half the time, about 4 years, should Lucid be able to secure a deal with one of the major car makers after having been in talks with unnamed ones earlier this year. Here's the problem. You can't be both a high-end EV car aiming at the top 1% and have a $25,000 car. Do you think a guy who paid $100,000 for his brand new Lucid Air will be happy when he's on a red light and next to him comes a guy with a $25,000 Lucid nodding his head like, "Hey, you've got a Lucid too, cool"? No, he's not going to like that at all, okay? The car you drive is a part of your overall image and social identity. Now, you might say, well, Tesla has both a cheap and an expensive car. Well, Tesla was the first company to make the EV market what it is today. They're light years ahead of Lucid in terms of production experience, capabilities, and deliveries. Remember, Lucid hasn't rolled out a single car yet. Plus, why would they ever want to be Tesla when they could be the EV car of the rich? When they could be the Porsche, Ferrari of the EV space? To relate to this point, let's move on to the last bear argument. can they actually deliver and make these cars as promised? One of the bullish arguments we made was the advantage of having a strong, independent production process they can control. But with the CEO saying they're looking for partnerships with budget car makers such as Honda, Hyundai, and Toyota, in order to produce millions of $25,000 cars to save the planet, that tends to blur a lot of estimates and numbers they're basing their future value off of. And why is that? Because then they're not in control. As of today, like we said, they haven't delivered a single car yet. And to make things better, you have Tesla being in a supply constraint. You also have Ford, GM, and other big car makers that had to halt production due to supply shortages. To fulfill these estimates, Lucid needs to get very serious about securing their supplies, organizing their logistics, and pretty much being perfect. And even if they do, does that guarantee they'll be able to get their hands on all the materials needed, such as lithium, nickel, cobalt? Now, what about chips? Plus, they're going to have every big name like Tesla, Ford, GM, Volkswagen, Toyota competing for these same materials. Also, they're basing a lot of their numbers based on reservations, which are fully refundable. In the case of Tesla Model 3, you had 550,000 reservations, out of which 23% were canceled. But even if the cancellation rate is insignificant, that was the first group of buyers who are oftentimes referred to as the early adopters. Selling to the second and third group is going to be a challenge by itself. So, if they're looking to take market share from Porsche, Ferrari, or high-end Germans, do you think that's going to be an easy task? These brands have been around for decades and they have very, very loyal audiences. Brands take time, and you can't be everybody's brand. Like I mentioned earlier, CCIV's price of about $18 values Lucid Motors at around $30 billion. Do you think that's a realistic valuation, given that Porsche is valued at $31 billion and Ferrari is valued at $49 billion? Remember, Lucid hasn't delivered a single car yet. So, I sincerely hope they stick to their original plan of being a high-end car manufacturer, not looking to produce millions of $25,000 budget cars that are going to hurt their image. Now, here's a quick rundown of the bullish and bearish points. Lucid Motors has Michael Klein and Saudi investors behind the company. Lucid has the potential to become the next Porsche of EV. Lucid has a different buying experience and production process. On the flip side, Michael Klein and investors might be selling off to take profits. They are trying to be both a high-end and a cheap car brand. And can they actually deliver these cars and meet the estimate numbers? So, that was the rundown of CCIV Lucid Motors, where we looked at the bearish and bullish points. But now it's time to get Felix Fry on the phone, where he'll be showing us his view on the stock, where it might go, and most importantly, he's going to show us how to play CCIV using options. No matter if you're looking for a short-term or a long-term play, and no matter if you're bullish or bearish, so stick around, the best is about to come.
Hey Marco, thank you very much for that. I appreciate both the bullish and the bearish arguments. Today I want to start with framing the risk-reward using the chart, and then I'm going to show you two ideas. One is a bullish trade and the other a bearish trade. Let's start with the chart. So here you have CCIV, right around $18. You can see that the stock has made a tremendous move higher, as you've shown, and then a big drop. The question is, how do you play it from both the bull side and the bear side? I'm always trying to find pivotal levels in the stock. The first one I look at is the high, $65. The second line I'm going to draw is the 35 line. You could see during February, CCIV had a hard time getting above 35 before the breakout and then the collapse. 35 seems to be a pivotal level right at that moment. The third line I'm going to draw is the $20 line. You can see back in January, there was a breakout support. Then in March, there were two areas of support. Again, in April, it did its dance around the 20 mark. And lately, it's traded below the $20 mark. The last line I'm going to draw is down here at $10. That's where the SPAC started, and you could see the volume back in January. What I also want to show you is this downtrend over the last 8 weeks. I think it's going to cause some resistance as the stock moves higher. Bulls are looking for the stock to trade back above this $20 level. The bears are going to be leaning against the $20 level. Now, I want to take your eye over here to January because the volume here was tremendous. There was over 1 billion shares traded in January. That's a lot of shares, which shows a lot of activity and a lot of buyers between the $10 and the $20 level. Next, I'm going to point you over here to February 22nd. That's when the PIPE was announced and these large institutional players got in. They were buying warrants at $15, which was significantly lower than where the stock was trading up at 60. After the announcement, the stock dropped and opened up right around that 35 level, only to rise to the 45 level and then get rejected, making its way all the way down to $20 by the middle of March. I think the 45 level is an important level. It shows you exactly where there were big sellers coming out of this large drop. Now, let's take a look first at a bullish trade, and the areas I'm going to target is the area above $20, and I'm going to look at that $45 strike. I'm going to see whether or not I can get something between 20 and 45. As you go higher, I think you will see resistance at the 22.5 level, the 35 level, the 45 level, and if it can get through all that, then it's going to go after those highs at the 65 level. But by the time you get to 35, 45, the valuation of Lucid is going to come into question. So that's where I think the resistance is. But let's take a look at the options chain. I picked a longer term play because I think Cciv will need a little bit of time to turn itself around here. So let's take a look at selling the 10 puts, okay, where I would get long at $10. By selling the 10 puts, I get long at $10, and then I'm going to look at the 20 calls, buying the 20 calls and trying to sell possibly something on the upside because I believe there will be that resistance. Remember, we framed the risk reward up above at 35 and 45. We should see some resistance. So I'm going to look at the 45 calls. I'll give myself some room here. I'm going to look at the 45 calls to sell. So I would sell the 10 puts and I would get long at $10. And then I'm going to be long between 20 and 45. So let's talk about the pricing. Cciv Jan 21st, 2022 expiration. I would sell one Cciv January 10 put at $1.25. I would buy one Jan 2022 $20 call at about $4.40. And I would sell one Jan 45 call at $1.70. The total cost would be $1.45. You take in $2.95 with the sales, and you pay $4.40 with the buy. So for $1.45, you have exposure between $20 and $45. You take the risk of owning the stock at $10. I think that's a better risk reward than owning the stock here at around $18 with $8 of downside and clearly all of the upside. But I think all of the upside is capped for the time being. So that's the long trade. On the flip side, the short trade was a little trickier. So here I chose the August expiration. We're looking on the put side, so I'm going to shade the calls and focus on these prices. I chose the $15 strike. It's $2. They don't make it easy here. In order to buy these puts, you would have to think that the valuation would be cut in half from here. Now, is that possible? Of course it is. But I just want to make you aware of how they're pricing these options. Half the valuation would put Lucid at approximately $13 to $14 billion. When you compare that to Porsche and Ferrari, maybe it makes a little bit more sense. I think the short side is a lot tougher here. I like the bullish trade better if you wanted to get long the stock. Here, it's a little bit trickier, and you got to be thinking it's going to be cut in half from here by August. So that's what I got, Marco. The bullish trade and the bearish trade. I'll turn it back to you now.
Thank you, Felix, for giving us a few different options trades to consider in Cciv. Now, if you enjoyed the video, please leave a like. And if you'd like to see more stock analysis just like this one, make sure you subscribe to the channel and turn on the bell notifications. Also, I would love to hear your thoughts on Cciv and Lucid, and I'd like you to add to the story. Comment your thoughts and opinions on the bullish and bearish cases we've made, and tell us where you think Lucid and Cciv are going next. Also, don't forget, we do a live stream Monday through Thursday at 1 p.m. Eastern on the Winning Picks podcast, where we discuss different options trading ideas, answer your questions, and help you trade options like the top 1%. Thank you. I'll see you in the next one.